Hey Boris, very good morning. How you doing, my man?
Morning, morning.
All right, I think the markets look a lot. If I can get my words out, I'm too excited. A lot better this morning, in my opinion. I don't know if you're seeing that correctly, but I feel like the patience was definitely worth waiting to see price develop.
Yeah, it's really testing the patience, man.
Yeah, I mean, it is, and that's why pretty much yesterday I just set alerts at those places that I wanted price to pull back to, and if price didn't pull back, I literally just got on with my day. So that's the way I combat that. But yeah, coming to the charts this morning, I definitely feel a lot better than I did on Monday and even yesterday. Although price has moved without, well, not without us, I feel that price has just developed and showed us that okay, maybe now it is worth the risk in a couple of the short positions on the cross pairs potentially, or even I think even what was it, GU for a potential long if we can't get the shorts. I think either way it's looking quite good. But anyhow, morning everyone. You can tell by my enthusiasm, I'm a lot happier to see price develop now. The DXY, of course, much like yesterday, it is pretty much unchanged, to be honest. I mean, we got to the charts yesterday, price was up here, was waiting to see if it would come up to those session highs, up back into that 4 hour order block that was pretty much just sat there only as a result of that bearish engulfing candle. Ordinarily wouldn't like to build a bias from that point, but price is pretty much telling me to do that. So I've got to start reacting with the market at some point if I feel like I want to take a trade this week. So that's the area that I'm looking to find a reaction from. Of course, there is definite reason why the DXY could still roll bullish and push price, let's say on AU further down. We can understand that. However, and what I mean by that is further down to, let's say, these areas, down to these 4 hour order blocks, which would make sense even just by eyeball looking at the distance that DXY may have to travel to get up to those areas, then we can understand exactly why the DXY wants to push higher, fill the gap, tap into the daily order block, refine within that area is the 4 hour. But we'll see if price shows its hand from this area, which thus far it has given us a move down. We still have the market to the gap to fill to the downside. So there is all the reason for price to want to gravitate towards the lows. Just as important it is for price to want to gravitate towards the highs. But what we can see is the last 3 days we're not really making any, thank you, not really making any real highs on the DXY. So I've called it a session high now. And you guys know from session highs, if that was any other cross pair, I'd be quite aggressive in my method of taking it. And what I'm doing at the moment on the DXY is just moving that structure point slightly higher. So yesterday the structure point was very much so here as a result of price only making that move. Therefore, it was very important to understand is price going to break that area first and foremost before looking to for price to come back in. But as a result of not making a high from that area, I've called it a session high. And then as a result of doing that further, I've just brought that structure point slightly higher. So conservative version of me would say, okay, wait for this structure point to be broken. That then would be an aggressive short position down, but aggressive short position from where? A session high area that price is failing to break and close above. And first and foremost, we have had that move from that area. So of course it would make sense to have a look, but not in the immediacy, because at the moment we're not seeing any real movement from it as of late since calling it the session high. So the session high is just an identification of where price isn't breaking above or below, where there's an order block and you can't then refine it down any lower into the 15-minute time frame. So therefore, just wait for a break or a snap of structure, pull back into the area of interest, and then I believe that could be every potential for the DXY to start rejecting. Of course, we understand at the moment, weekly time frame, weekly 50 MA, price is being held there. So as we go towards the end of the week, we can look to identify, okay, then perhaps we have made the high of the week. I understand that price has certainly made a low already as a result of yesterday or Monday's daily candle closing bearish. However, we do expect price to reject that weekly 50 MA for the week. So as we get closer to the week, that's where, or the week ending, that's how I would like to start being a little bit more, let's say, aggressive, because I have that confluence that price should want to close at least below it. And then when you say, okay, well, below it to where? Then look at the opposing EMAs. Well, potentially below it down to the 4 hour 50 MA, or at this stage, a little bit higher based on the order block in the opposite direction, where again, price has made that high from. I wouldn't, okay, I can't really call it a high, but price has shown from this area. There is every reason to place a little 4 hour order block in that region as a result of after price has made that tremendous move towards the upside. That's definitely the high. And then this could well be the higher low for the higher high continuation. But as I've said, session high as a result of not seeing that higher high continuation. And then we build the bias up from there to understand why. So that's a DXY at the moment. It can go either way, but my thought process currently, as I sit here now, potentially we can look for a move from that area. So, a lot to discuss today. I'll keep it as short and snappy as I possibly can. So, GCAD, of course, that weekly candle rejecting that weekly 50 made previous candle closed weekly below it. So it's in a good position, GCAD, for the roll of the week. It's looking great. If we can get that final push up towards the upside, then potentially that does for me suit a very aggressive short position down for that reason alone. And all the other EMAs are still supporting price towards the downside, hence why we're not really seeing price push as far up as we'd like to then take that short. So again, it can I see price get up to this area? It would be great. If I can't, then you guys know that I want to see something coming out of an area of interest beforehand. So in order to do that, go to the daily time frame. I can't see any reason to select anything on the daily time frame at all. Just understand that yesterday's daily candle was bearish, and we closed and we wicked into that daily 50 MA and we closed out of it. So perfect. It's looking good for shorts at the moment, in my opinion, GCAD. And the 4 hour time frame looking to build the bias up from there. Unfortunately, I can't select a 4 hour. Oh, okay. I could put a 4 hour order block in here as a result of there being one at some point in time, but all that is going to direct me to do is refine that area down anyway, and then I can see exactly within that area that 15-minute order block where I would like price to pull back into before looking for a confirmation for a short position down. Again, that would be a very aggressive position as a result of price not breaking structure points first and foremost. But what I can already identify, if I bring this up larger for us on that 15-minute time frame. So first and foremost, we understand that it wasn't really an area where we were looking at shorting from. Therefore, you start to build the bias up and then understand, well, why would I want to take a position from here and not so much just wait for the highs? I quite agree. Up at the highs is the best case scenario. But if I'm going to take a managed position, a managed loss, would I mind taking a loss from this area if I can identify a clean enough setup? Well, let's have a look. From the left-hand side, we're just looking at basic price action, higher highs, higher lows, call it a higher high, a higher low, and price has failed to make a higher high. And in fact, what we now have is a potential break of structure, creating a first low, breaking this structure point. Again, it is aggressive as a result of price not breaking this at the moment, but after a low created, what are we expecting? Lower high. Would it make sense to anticipate a lower high back into that area? Well, of course, based on the fact that we're rejecting those EMAs to the downside, price is failing to break above and showing us that it's not pushing further higher. So therefore, for me, if I'm going to take a loss today, for example, let's call it GCAD, can I journal that as a good loss to take, in my opinion? That price is moving, and it's just, can I identify a setup entry criteria to then support that position short? At the moment, I'm going to say yes, as a result of not just because I've been patient for the week, but it would make sense. Now, I do need to refine this order block because it looks like it has been mitigated. Yes, it has. It has been tapped. So I'm going to put an alert there. And when an order block has already been mitigated, well, straight away, I'm forced to then await for price to create me one. So even if price comes into this area now, I'm going to need to see a bearish engulfing candle allow me to have that 15-minute order block to select from, and then I'll take that position short accordingly. With that said, I'm inclined to go to the 5 minute just quickly to see if I can find a better order block there that certainly hasn't been mitigated. So we've got a lower time frame 15-minute order block, 5 minute order block, sorry. Again, that doesn't mean I will take an immediate position from on GCAD, but what it does mean, if that's going to update, please. Perfect. What it does mean is now I have an area where I believe price could well go to before giving me that bearish engulfing 15-minute candle. What that does allow me to do, which mm, would I do that? That as a result of using now the 5 minute, which is refined from a 15, what you could do, or what I could do, I should say, is now use the same principles, but just on the 5 minute time frame. So I understand from the left, we've had a break of structure as a result of this move here. So if price comes into the 5 minute, this would be incredibly aggressive. I'd have to wait for a bearish 5 minute order block, bearish engulfing 5 minute order block to then create me a bearish engulfing 5 minute candle to then create me a 5 minute order block for me to trade from. So it's exactly the same on the 15-minute time frame. On the 15-minute time frame, I'm not looking for just a bearish engulfing 5 minute candle. It is time frame specific. So therefore, if I'm utilizing the 15 or the 5 minute, that is what I must wait for on that particular time frame. Depending on what else I have in the market today, I may well look here for a 5 minute engulfing candle to the downside, 5 minute order block, and look for a short position. But again, that would be an aggressive trade as a result of price not breaking these lows first and foremost. So of course, that would be the best case scenario. Snap the lows, pull back up into an area of interest, and then take that short position. That would be my favored position, of course. And with that said, we'll just have to see what else is available throughout the day. So, of course, up at the highs, best case scenario, right here now, as a result of identifying this first low, break of structure to the left, pullback area of interest short. That would be a nice position for me as well to look to take today. With that said, as well as that, could I identify that as a potential Asia range position? It would again be a very aggressive Asia range position, but you can identify it nonetheless. You can say, well, price made a high from this area, or if it didn't to the left, you can say from the most recent price action, price made a high. Can I identify a break of structure? The answer is yes. That's a break of structure to the downside. Can I identify a 15-minute order block? I can, but it is mitigated. So it can't be an Asia range position, but still you can identify the break of structure, which is very important if you're going to look to take a position sooner rather than later. So that's GCAD for me in terms of the shorts, either here or here. Alerts just above, oh, excuse me, just below that 15-minute order block. And I've got an alert. Let me move that slightly higher. If I can identify a break of that structure point, then of course I'd look for the pullback and look for the short position. So that's GCAD at the moment. I like GCAD. Let me just double check. Yeah, I think the EMAs overwhelmingly are supporting that position down. Even the 4 hour 50 EMA for if you were to enter that candle or enter that trade whilst the 4 hour candle is looking bullish, I think that's giving a lot of nice confluence. If you just look at the 4 hour candles of late, they are rejecting that week, the 4 hour 50 EMA. And then, of course, supporting that, the later on in the day you look to take that position if it materializes later as a result of, let's say, price breaking that structure to the downside and then pulling back, then you have the confluence not only of the four, but of the daily time frame, daily 50 EMA as well. So I like GCAD a lot, a bit technical with the analysis, but I think that makes good sense. Let's keep with that level of professionalism. So that's GCAD. I like GCAD a lot. In terms of the long position as well, as I've said, I'm always on the charts at the moment. Not doing any other type of work. So therefore, I'll let you guys know if I like to see GCAP, but in terms of the logs. But here there's a 15-minute order block simply in the middle of nowhere just to understand, well, is that going to be a reaction point there? But to be fair, GCAD down at the lows is where I'd be more interested to take a long position from this 4-hour order block refine within that area because that is the area that has most recently made that push up. So anything before that, again, is going to be a bit more of guesswork that you're going to have to add your confluences in to take that long position. So I like GCAD shorts. Definitely the play that I'm looking for today. GJ, a little bit like GCAD as well. To be honest, we understand why we're getting that rejection from the highs. We've got the EMA supporting the short positions. We've got the daily candle that just about closed below the daily 50 MA. So again, just like GCAD, good news to look to short that with the alignment with the 50 MAs on side. So certainly, if you're going to be looking to journal that, they are favorable for your short position as well as that. Yesterday, I remember we was a little bit, well, I was reluctant to utilize this 4-hour order block, and I wanted to see, well, is it going to do anything? Is price going to hold at that area? Can I trust that order block? Is it worth risking money on that order block? Is what I have to ask myself. And you can see here the best order block from that 4-hour time frame is up at the high, simply because it's within the highs of that range. But I've said if I'm wrong about the range, I need to react. I'm not just going to wait for the range, let's say, to be broken because I could be wrong. And I understand that. Therefore, I've put that on the chart from yesterday. I've now dragged it further across to understand, okay, potentially I can rely on it. And then we have the 4-hour 50 MA that is supporting price action short as well. So again, like on GCAD, if we get that push up, it's not then to be fearful, where others would be fearful that they don't want to enter on a very bullish engulfing looking 4-hour candle. We're just going to be sat there understanding that, well, hold on a minute. We understand how the EMAs work. We've got daily on favor, 4-hour on favor. Let's look for the rejection short from those areas. So when you look to refine that area down, what do we have? Let's go to the 15-minute time frame and we can look to identify it. So again, I mentioned GCAD again, but first and foremost, I was reluctant to use this order block yesterday because of this area up at those highs that, in my opinion, was valid. You've got Asia range up at those highs to be filled. You've also got a 15-minute order block, very minute one up at these highs as well. But price is telling me something, so I have to act accordingly. And then what we can say just based on basic price action, of course, the high is certainly come from this low area here, but am I going to wait for this break and pull back before I take a short on GJ? Absolutely not. So I have to move all my structural principles slightly higher. So can I say, well, a high was created from here? Absolutely. The best case scenario, wait for that to break, then pull back. But am I going to wait for that as a trader that knows how to be aggressive? No, I'm not. So again, move the principle slightly higher and then just simply understand, well, there was a high in the market created. What's happened since there? Can we say that's a low, lower high? Lower low created. Did price make a higher high? I'm not seeing it as a higher high, but what I now can identify as price has made a low, followed by a lower high, and maybe we're going to see a lower low created. Of course, I understand in the bigger picture that actually here is the high. This could well just be a pullback as a higher low for a higher high continuation. That's also fine. I don't mind being wrong, but can I understand my bias why I'm building that up? Yes, 4-hour refined 15-minute order block is very much so available. That 15-minute order block has definitely caused a break of structure in terms of most immediate price action. So if price wants to come back up to that area, I'm going to expect a reaction of some sort. Am I going to take that immediately? I'm still reluctant to do so as a result of this area up at those highs. So simply I'll wait for my highest level of entry criteria, particularly if price doesn't, if I get rid of some of these drawings for a second, I've got two options. If price makes a continued break of structure to the lows today, snaps Asia, pulls back, then yes, I will be very aggressive there. I just will. And the reasons for that, sometimes there isn't a valid reason. But for me, once you get that snap in the market, in terms of the direction that you want to trade, and price is starting to make that move, That's the intention. Therefore, I want to be on the back of that intention when price comes back to the point of interest. But sometimes, if you just like a position, sometimes there isn't really a reason, but you have to start creating that reason. We've got valid reason to take that position based on the EMA's order blocks refinement and the 15 that's available. However, if I don't get that snap at the moment, we get, like, as I like to describe it, the worst case scenario where price just comes back to the area and it fills you with a couple of questions. Oh goodness, price has come back, hasn't broken structure. What do I do? So that's why I always refer back to, and Boris is bored of hearing it, 15-minute bearish engulfing candle. That will allow me to have a 15-minute order block, wait for price to come back in. The engulfing element of the candle will break structures on the 1 minute time frame down to the lows, and then I'm able to use the 15, 1 minute, or a 5 minute order block that you're just going to have to trust me is definitely going to be there if it is a bit engulfing candle. If it's just bearish, then you'll probably only get a 5 minute, or potentially a 1 minute. You certainly won't get a 15. But that's GJ. I like GJ shorts. I think I've looked at GJ enough over the couple of weeks to share that position with you. But of course, understand that the better position is up at these highs. Again, it would also make good sense because we are still rejecting those EMAs. The only difference here that I like the 4 hour order, excuse me, I like this area here more so than this area as a result of the 4 hour 50 EMA. But what we will see, and what we have seen many, many times, is that you're expecting a rejection of the 4 hour 50 EMA from, let's say, this higher area. You enter the position and then price closes here. So then what you have to do at that stage is when, as a result now of price closing above that 4 hour 50 EMA, you're just going to have to manage your position a lot more aggressively because you understand, well, as a result of the 4 hour closing now above that 4 hour 50 EMA, price is of course now looking bullish on the time frame that you've entered on. So therefore your thought process was incorrect, but you have to kind of manage yourself out of that position, in my opinion. That's what I would be doing. So as soon as price looks to then gravitate back towards that 4 hour 50 MA, I'm already break even as by the time price has done that because I understand 15 minutes now made a higher high. This pullback into the 4 hour 50 MA is going to be the higher low for a potential higher high continuation that could well take me out of the position. So I like GJ both elements. I would much prefer price to break, come back into this most recent order block, take the short, have the EMAs on side sooner rather than later, as opposing to that scenario where now I'm forced to manage against the 4 hour EMA. But just be mindful, of course, that you've got the daily 50 MA on side. So therefore, that's also a powerful concept, knowing that you've got a couple more hours left at that daily candle close. So I like GJ. As you can see on the 4 hour, best opportunity up at the highs. But if I'm wrong about the range, which I don't mind being, I'm willing to act sooner rather than later on GJ for a short from that area. So that's GJ. AU. Like AU finally. Various reasons. Boris already has heard this many times, but weekly order block rejecting to the downside, hence why I couldn't take a long position on that. I believe that thought process that I have, that strategy, that's pretty much a fundamental in my trading. And I mean, telling you guys, it's no secret. You guys know that I manage funds that aren't funded accounts. And part of, let's say, part of my contract is that I can't breach that rule. And what that is when I'm in a higher time frame weekly order block, I cannot take opposing positions from that. And it's great that I manage funds for a couple of people, but I'll be honest, I have more enjoyment managing the funds for a trader because he understands the ebbs and flows of trading, and he also understands my method of trading a lot more so than just a guy with a couple £100,000 that would like me to make a couple of percent a month. Therefore, as a result of managing the funds for that trade, I've built that in with him, and trading into those weekly order blocks is something that I just simply can't do. I've said that thousands of times now. So therefore, I believe yesterday in particular, that stopped me from a potential loss taking on AU, just understanding that when you're in that higher time frame, order block, understand what your thought process is. Well, I think price should be shorting out of that order block. So why on earth am I going to be taking a long position out of it? I just have to sit back and wait for price to develop, and then I can start trading alongside my higher time frame thought process. And I believe if you guys are able to, or if you want to incorporate that in on your trading, I think it's a very powerful concept because not only does it build in a bit of discipline where you understand, right, I've done my analysis, weekly order block to the downside, I'm expecting shorts. Therefore, why am I going to be looking for longs? Therefore, AU for me has had to take the backward step, although I wanted, or although I could see long positions, I can't take them. So therefore, that's one pair that you can't trade. So that builds in a great deal of discipline. And once you understand that, well, Charles, his funds will literally be taken away from him if he does that. You guys can understand how powerful that concept is, right? So AU today, bottom line is we finally, in my opinion, we've broken that bullish structure point. Therefore, I want to wait for price to pull back for those shorts. It's pretty much the same as what we were looking at throughout the week anyway. But what we had to understand is on the daily time frame, what was that bullish structure? And we had to see that price made a high from this area on the daily time frame. And you guys all know that I don't take into consideration price action with great importance on the higher time frames. I'm just looking at EMAs, I'm looking at how price is reacting to those EMAs, previous candle closes and order block selection and imbalances. Therefore, however, I should say, when I am seeing a high created from an area, then this is quite clearly a high low based on basic price action, and I'm getting now price being held at that area. I'm reluctant to look for short positions because I'm shorting against bullish pressure on a higher time frame. But what we had yesterday, I know it's very minute, but we take it for what it is. Yesterday's daily candle, not only did it close bearish, but it closed below my identification of a structure point. And then to ask that question again, because I'm only drawing lines on a chart. It's as simple as that. It's just lines and colors and gam boxes on a chart. I could be wrong. So what do I have to support my thought process that price has now broken cleanly or clearly to the downside? The daily 50 EMA. And although it's very, very, very minute, it's facts. We have broken that 50 EMA to the downside and we closed below it. So therefore, that is my first clear sign on AU now on the higher time frame that we could be ready to roll to the downside. Lower low created, expect the lower high, lower low continuation. So that's what we're rolling with at the moment. And therefore, once we use all of that information, go to the 4 hour time frame, we've got positions where we can look to be aggressive now because I know that not only am I trading alongside weekly, I'm trading alongside daily. 4 hours should be now trending alongside that. Therefore, the 15-minute time frame should also be printing a nice looking bearish 15-minute trend, which should allow me to either jump on the trend based on the 15-minute time frame only, based on, let's say, Asia ranges or snaps and retests of Asia or breaks of structure on the 15 pullback into an area of imbalance, or wait for my higher time frame directional position. So higher time frame directional position right here up at the highs, identified as best, supported short by the 4 hour 50 EMA. It's a good position, but is price going to get where Charles wants it to get to, which is going to be around about 60 pips? Price may not do so, but I can certainly tell you now that if you are going to be the most patient trader, that would be the better opportunity to wait for because you have all the support there. It's just whether or not price is going to get there. So that's the best opportunity. 4 hour order block, refined. We've got that 15 just waiting there up at the highs. But again, as I mentioned at the start of this call, sometimes uh, I shouldn't call it managed losses, but that's how I identify it first and foremost. When I'm looking to take a trade, I say, well, if I lose this trade, am I going to be okay with losing a good trade? And I take losses all the time, but those losses don't annoy me because the losses that I take more often than not, I have a good reason to take that position. So I'm happy to take that loss. So first and foremost, up at these highs, of course, that's a position that I want to take. It's the best position. But anything in between, I need to ask myself, well, is this going to be a good loss that I'm happy to take? And at the moment, I am yet to identify whether this position in the market makes good sense. I know up at the highs it does, but the question I need to ask myself is, okay, Charles, if you're going to put an order block in here, why are you not going to put one up in here? So I need to give myself a reason why this 15-minute order block makes sense and why this one doesn't and why this one doesn't. Because at the moment, they're all just 15-minute order blocks. So I need to come to a conclusion why I want to trade from this 15-minute order block today. So let's start to build that bias. I haven't done it yet. I've just put it on the chart as I was charting it up. So of course, price action, lower low, or what you could identify this is one long low followed by a lower high, lower low continuation. That's the first thought process, which is the best option. Now we look at the intricacies of it. So lower low, lower high, lower low, lower high, lower low created. If price comes back in, I'm expecting a lower high for a lower low continuation. So that's my thought process based on the at the moment, based on just structure on the 15-minute time frame. So that's why I'm going to roll with that at the moment. Now, the second question, is that 15-minute order block actually even available for me to take from, be it aggressive or not, based on the fact, is it available? I.e., is it mitigated already? Can I can I take it from that position? So as I zoom in, my eyes. Yeah, so it's available. So what I will do is I'll bring that alert slightly lower to give me a bit of a heads up that price is in the region. And now the second, or rather the third element is, so how aggressive are you going to be, Charles? Based on the structure, based on the price action, based on the information you have at the moment, would I be aggressive there? Again, is that going to be a good loss for me to take being aggressive? Well, based on what we've discussed already, if I can get a break of structure pullback, then absolutely I will be aggressive there. That could even be a limit based on how I feel today. I'll be honest. However, the best port of call for me to tell you guys, particularly if you're learning the fundamentals, is once you've got that break of structure, more often than not, I would suggest that to be a limit order. But as I have more time at the charts, you can at least identify a 1 minute break of structure for price then to come back up and then short it. So that would be my suggestion because a 1 minute break of structure, not only do you allow yourself to give yourself a bit of a chance to avoid that, because no one likes setting a position and price goes straight into drawdown and takes a loss, and you say, goodness. If only I just waited for a 1 minute break of structure, and all that would have done was just save me a loss. On the flip side, a 1 minute break of structure could, of course, by the time you've had that 1 minute break of structure, price has got no business coming back and price just comes all the way back down. So you've got to deal with that as well. So it's all risk or trader specific how you want to take that position. For me personally, if I see that break of structure to the lows, I will set a limit order today, and I'll just accept the fact that I like that position. Therefore, it's going to be a limit order for me. However, there are a couple more decent looking pairs in the market today. So whether you'd want to waste your, I don't know how many trades do you guys look to take per day, but for me personally, it's a maximum of 3 trades per day. So I don't mind taking a loss, let's say, on AU as a limit order if I know I have two further positions for the day that I'm able to experiment on. So I like AU based on a couple of those reasons and the fact that, well, if price doesn't want to come back, at least can I get a little bit out of the market? And so break, pullback. This would be a limit order for me with no break. So as I described, worst case looking kind of scenario, price just comes straight back up, doesn't give you a break of structure, starts asking you questions. Then at that stage, I will be looking for a 1 minute break of structure here. So if I'm going to look for a limit order with a break, I'll wait for a 1 minute break of structure at these highs and be very aggressive, take that short back down because what I am seeing is very little slowdown on AU. Again, I could be wrong, but I'm willing to take that risk today as a result of price looking a lot better for me. And to be honest, I'm not really expectant. So once we've had that rejection from that weekly order block, I'm really not expecting price to want to go back into that weekly order block to the highs. And what I mean is, if price wants to come back up to this 4 hour 50 EMA, for me, it would be quite surprising because we should have now, as a result of even last week's weekly candle close, which would have been price action down to here, or even here, just about. That should be the rejection of that order block. So therefore, we shouldn't really be wanting to go back into that order block. But again, it's trading. I can be wrong. Price action can do exactly what it wants to do. I just have to accept the risk, manage my position, and take it from there. So that's AU. So as I said, break, limit, no break, 1 minute break of structure, and not an aggressive 1 minute break of structure. I really will identify the higher highs and higher lows pulling into that area. Once I've identified the most recent high low, I need to see a break of that structure point being broken, 1 minute order block back up into the highs, and I'll short it down. And the reason for that as well is I can just about identify an Asia range. So, can I identify a break of structure to the left? Absolutely. So we've price came in for that lower high, excuse me, lower high, lower low created. Of course, that's broken structure to the left just here. Not sure what's to the, okay, also break of structure to the left here. So very, very looking good looking Asia range. Then I ask myself, can I identify a 50-minute order block that's available above Asia? Absolutely, yes, I can. Here it is. Is it available? Yes, it is. So 1 minute break of structure, I look for the short. Simple, right? So you see the consistencies with my trading. If I'm going to look for a 1 minute break of structure, can I build the bias to support that? Can I make it make sense? So for me, if I take this short position and I get a phone call, hey Charles, I see you've lost X amount on AU. Can you explain why you've taken that trade? Well, absolutely. Here's X, Y, and Z. And is that good enough for you? Yeah, cool. It's just a standard loss. Then take it easy. Have a nice day. That's the type of phone call that I foresee that I'd have if I take a loss today on AU. Therefore, I'm happy to take that position. I like that. Of course, longs as well. Down at the lows. Yeah, I'd be interested in the longs looking to reject that weekly 50 MA. I hope that comes sooner as later rather than sooner. Then we can have more of the confluence coming out of that weekly 50 of May. I like that to happen, let's say Thursday, even better on a Friday, because now the weekly 50 of May only has that 12-hour period that we're trading to actually reject it towards the upside. So be happy to take a position below that weekly 50 of May, got good range back up to that weekly 50 of May, lock it off at break even and see if you can get a move off of it for price to close somewhere between the weekly and the most restrictive for EMA, which would be the 4 hour by the time price starts to push up. So AU, nice favorite, excuse me, EU, nice favorite as well today. So, I mean, all of these are looking a lot better than they did on Monday and Tuesday. I don't know if Boris would agree or you guys listening as well. I can actually elaborate on the chart a lot more and have a better bias based on what I'm seeing in as opposed to based on what I would like to see. We've already got that move now, which is grand. GU. GU. What do we have on GU? So, previous weekly candle closed below weekly 50 May. So, I'm looking for this candle to reject it to the downside. That's a given. Daily time frame. What do we have? Yesterday's daily candle closed bearish. Does that matter to me? Well, we are below the daily in the 4 hour 50 May. So, that's also very good news. Looking for short continuations based on rejection of the weekly. Then, of course, we've had the 4 hour break consistently structure points to the left hand side. We can see here price was making those high highs. And we've just had that move with no pullbacks. It's nothing that we could have done about it. There was simply no position to take, in my opinion, on GU. Hence a bit of radio silence from myself because I couldn't see a position. Therefore, I'm just not going to speak and influence anyone into taking any position. So where are we today? We've definitely, excuse me for a moment. Okay, so we've definitely made lower lows in the market. This could has every potential to be after the lower low, lower high, lower low continuation. But what I like about GU as well is I don't know why if we're wrong completely, and as I say, I understand I can't always be right, but therefore gonna give myself either way to trade GU. Now, trading GU long does obviously mean DXY weakness. And just to head back to the DXY, if GU comes down here, that is DXY strength. So to get DXY strength out of the market at the moment, we're going to need to see DXY start pushing up. Or if you get that immediate weakness, excuse me, then DXY strength coming out of the market. So that's firstly what I need to understand. Then I'm saying, well, if I get the DXY strength coming out to push price down to these lows, then would I expect the DXY weakness to happen as well? So again, this is dependent on the DXY, where it pushes for me to then understand, well, where am I going to get the weakness coming from? Because if I get the weakness coming out of the market now on the DXY to push price down, then I need to understand, well, where could the strength come from? To wait, I forgot that right. DXY weakness is going to allow GU towards the upside. So if we get DXY weakness now, then potentially price is going to be pushed back up to the better areas where I'd look for the DXY strength to come out the market to push price down. So DXY weakness first and foremost could well come from this area to allow them price to roll towards the upside on GU, and then DXY strength coming out of the market from this area down at these lows would allow us to then short the DXY potentially from those highs. Yes, correct. There's always a tongue twister. Right. So that's the thought process at the moment. Now, as we can see, there's a cluster of 4 hour candles here, but on that 4 hour time frame, I really can't understand just yet where I could look for a position aside from me just heading down to that 15-minute time frame and trying to look for those intricate breaks of structure. But at the moment, it does look like all the other pairs, but I'm just not getting it. So therefore, what it could be is that the pound is evidently either I haven't worked it out yet. It's far too confusing for me to do this morning. It's either stronger or weaker based on the fact that I'm more inclined to look at AU and EU as opposing to in around these areas as opposing to GU. And that's fine. If you can't see it, you just have to let it go, right? So therefore, I just revert to the highs and lows and call it a trading range and understand. I mean, look at my alerts. This one hasn't moved, but that should have been down here. I know that's there for the snap, for a break of structure to the lows, like so, and then a pullback into the area of interest, which again, I'm not really inclined to take. So I won't be doing anything in the middle of here. I'm just gonna wait for this low area and wait for this high because I'm just not seeing anything from here. Let me try again, just for argument's sake, big picture stuff and see what we got. So of course we have higher high, higher low, higher high, higher low, no higher high. And I'm not really, I mean, if we call this a structure point, or what we'll do, we'll call that a structural area. So here is the most recent higher low area confirmed as a result of that higher high. And as you can see, price is failing to break that area. So that doesn't mean for me I should be looking for potential longs. But what it does mean, if you do tie that into the DXY and understanding that the DXY has every opportunity to short from this area, now you can understand why this area is now holding up and a potential long from here may make sense. But I've got no 4 hour order block to support that, first and foremost. No, that order block is down here. I'm not just going to put an order block in the middle of nowhere. Nothing on the daily to help support that, aside from previous daily lows, which of course those previous daily lows is this area here in general. Then if we roll back to that 15-minute time frame, let's look to understand how. So the best. So first and foremost, Asia range, not a factor. There's no 15-minute order block that is around this area, such as let's say like this, for example, break of structure to the upside pullback. So that's not available. So this is going to be, what do we have? New York, Tokyo, London. Yeah, this is a session low to be fair. So what I need to see on the session low is the same thing I want to see on the DXY. Most recent price action. So if we call this an aggressive snap, and then this would be also an aggressive, but obviously less aggressive. And of course, the key structure point is this area here. So couple of options based on what we've just seen. We can absolutely understand if the DXY is going to roll short from current position, break or structure, pullback area, look for a long position only if there is a valid order block to support that, in my opinion. And then, of course, the higher you start to break with the order block there available, the more aggressive you can be when price returns. So, again, this wasn't something that I've seen prior. I've just noticed it now. So what I will do, I'll bring this alert slightly lower. I'll see if I can get a break. I'll see if I can then identify an order block from that area. And if, let's say, let me paint the scenario. So we get the break. There is a 15-minute order block available after that break. Let me draw that properly. So the most aggressive breaks, so paint the worst case scenario. If you get a break like that, I will still wait for a 15-minute engulfing candle because not that I don't like the area and I don't trust my own analysis, but I don't like the area. I'll be honest with you guys. So if I don't like the area, I'm just going to revert to my highest degree of entry criteria, which should give me a better chance to go towards break even. So if I break this 15-minute engulfing candle, 15-minute order block, look for the long position back up to those highs when price returns. If I get that kind of break, I'm happier to see that. And even then, with Asia available here, that hopefully is going to remain available, I can then build that into my confluence to start looking for that long position as well. Again, I may. So the first position was a bullish engulfing. Here, I might just look for a bullish 15-minute candle. That would then certainly give me an order block on the lower time frame, such as the 1 minute or the 5 minute. And when you get those types of order block, what does that mean? Rhetorically, I'll ask it. It just means I have to wait for price to return slightly lower before I take that position. So again, still a degree of patience is available for that to happen. And of course, if price breaks this structure point, leaves me with a 15, then here I'll wait for just for a 1 minute break of structure. I'll look for that long position. So yeah, initially didn't like GU from that area, but using the DXY, you can definitely understand it. So what we'll see on the DXY is exactly inverse. If we then identify that here on the DXY, we've got a session high and we've got our structure point here, but for GU, it'd probably be more like this area. We get that break of structure pullback. That would be GU doing exactly the same, pushing up, pulling back. And then we'll be looking to use the DXY's confluence. So again, can I journal that position as a half decent reason to take a loss? I believe I can. So therefore, I don't mind GU actually, not too bad at all. So that's GU. So I think everything today looks half decent apart from US dollar CAD. US dollar CAD still in that range, but again, if I'm wrong about that range, how would I be looking to take it? Well, understanding that we're pretty much just waiting on our hands in terms of what the DXY is going to do. If the DXY is going to roll bullish or bearish, then of course that's going to play a big part in this position, more so than the others, in my opinion. Because on the US dollar CAD, there's not really more. There isn't too many areas where I'll be looking to take a position from. So weekly time frame, weekly 50 MA, looking to reject it. You see where this 4 hour order block even is on that weekly time frame. It's pretty much in the middle of nowhere. On the daily time frame, does it make sense? Well, there's no daily order block there either. We're just getting a hold up of daily candles and it's just pretty much around the session high. Then when you start to refine that area down, that's why I've identified a range because I can see where US dollar CAD could clearly print making higher highs, higher lows, higher highs, and higher lows. And now we're not doing anything, then that's the range identified. So a range, I'm expecting price to pop up, then I'll short it back down. Can I refine that 4 hour order block down? 15, right at the highs, available. So I'm waiting for that, expecting for price to actually be, in inverted commas, manipulated towards the highs, tap in potentially into that weekly 50 MA. Then I'll look for a bearish engulfing candle as so long as it breaks this 15-minute order block, and I'll start the process all over again and look for that short position right back down into the range and down towards that 4 hour 50 MA. So I don't mind a US dollar CAD short, but again, gonna have to use the confluence of the DXY to support that quite heavily. Because at the moment I can't really, well, it's not for me to see it or not. If the DXY pushes bullish, how far bullish is it going to push? If it makes sense with US dollar CAD, DXY pushing bullish. Well, DXY could well push bullish into filling that gap, find liquidity from filling that gap, and then absolutely slam towards the downside. And of course, that's going to look really, really nice for US dollar CAD as well. US dollar CAD will also push up into that 15-minute order block, just like the gap on the DXY. Then we look for the shorts. I think good opportunities all around. And with that said, considering I'm looking at GCAD, GJ, AU, EU, GU, and US dollar CAD, UJ today has just taken a backward step. I haven't even marked UJ up, I'll be honest. UJ, I'm not willing to take shorts on UJ from anywhere aside from up at those highs. I don't think it makes sense. And then with that said, in terms of the long position using that DXY strength, then the only area that I can really see is this area here. Because any other area, let's say for example, if we just use the 50, we made a high from this area. Of course, you'd expect price to come back into this area. I think we actually did mark that off yesterday, and price just wicked in and flew straight away. So therefore, there's no other area for me to look for a long position. So the best thing for me to do now is simply move my structure point higher, understand if price breaks up, I'll be looking for exactly the same thing. Can I get a 15-minute order block of which where price has broken up? I can see here there is a 5-minute, excuse me, a 15-minute area, but it's already mitigated. So I'm not going to start waiting for price to do that. But what I will do is see if price is going to break from that area, then pull back, and then potentially there's no point. It's just going to be the same across all the other cross pairs anyway. So unless I'm having a preference for UJ, I may as well take a very similar position on the cross pairs. So that's my thought process today. Thank you very much, team. Boris, I hope you're still not asleep. Yeah, I'm
No,
not making you fall asleep. But yeah, I don't know if you'd agree. Today looks a lot better than Monday for sure, yesterday for sure as well. So looking to attack the markets today and see what's
yeah,
available.
me too.
Yeah, gonna go for it today. Cool, my friend. Well, I'll keep you posted in the chat, and I'll guess I'll speak to you live tomorrow again.
Good.
Take it easy, Boris. All the best, my friend.